This is Ambition Today, a podcast about entrepreneurs, creators, investors, and builders who ambitiously change the world. Each episode explores the hardships and heroism of everyday life to reveal the key moments which leave behind a lasting legacy. Today we are joined by Sean Ellis. He is the author of Hacking Growth and CEO of Growth Hackers. This is Ambition Today.
These are the entrepreneurs, creators, investors, and builders who ambitiously change to the world. Explore the hardships and heroisms of everyday life while we reveal the key moments to leave behind a lasting legacy. This is Ambition Today with Kevin Siskar.
What's up, world? I am Kevin Siskar, and you are listening to Ambition Today. Make sure you subscribe to our website, siskar.co, to make sure you never miss the latest Ambition Today episodes. You don't want to miss the last episode where we talked to Hideo Resi. He's founder and CEO of the Founder Institute, the world's premier launch stage startup accelerator. But today I'm super excited because we are joined by Sean Ellis. He's co-author of Hacking Growth with Morgan Brown, and he's also the CEO of Growth Hackers. Sean, welcome to Ambition Today.
Thanks, Kevin. It's great to be on.
Where are you calling in from today?
I am in Southern California. So I was in lots of tech hubs, and then I escaped to Orange County, which is not so much of a tech hub.
Awesome. Well, I'm here on Fifth Ave in New York. I'm excited to catch up today. But before we get too deep into the episode, I know we normally start with, the early years and how you grew up. But just for like a very high level, so the audience knows, what is growth hacking in general before we start talking about it too much?
Sure. So growth hacking, I started in marketing. And so for me, it was discovery that marketing only has so much influence on actual growth in the business. And so growth hacking is what I think actually businesses need to do to drive growth, which is experimenting across the full customer journey. So not just acquisition, but all the way through activation, retention, monetization, all of those things to grow customers and revenue sustainably over time.
All right, awesome. So I'm excited to hear more about that a little bit later in the episode, being as you're an expert in it. So where did you grow up? What were some like early influences from the early years of your life that kind of stick with you today?
So I grew up actually in Newport Beach, where I live now, but left for 20 years. And just to reinforce that I have never gotten out of my own neighborhood here, but I am back after 20 years on the road. And for me, I grew up, I was pretty entrepreneurial growing up, for everything from getting in trouble at school for selling candy to, Christmas tree delivery businesses in high school and paper routes throughout growing up as a kid. And I think part of my inspiration around that was my dad's an entrepreneur, and watching him build and grow his businesses. And
what did your dad do?
So he had medical offices, like medical management. So his partners are doctors, and they had offices around Southern California. He retired about a year ago, but he kind of, for me, it was always little lessons here and there, constantly. I think just telling me the types of stuff that really mattered from an entrepreneurial perspective that ultimately helped to shape my view on things.
I think that's so key. Having those mindset influences early on makes a huge difference.
Yeah, for sure.
So then you spent some time at NYU, Harvard, and University of California, Davis, and you studied abroad in Hungary, which I'd love to hear. Study abroad, for me, feel is one of those experiences living in another country that shapes you. What role did that education and travel play in your life?
Yeah, so I think part of I think what defines me is I do have ADD, and I think ADD people have a pretty high percentage of ADD people are entrepreneurs and also world travelers. So you can kind of see two themes in my life. I actually, even though I grew up here, I was born in Australia. And so I kind of was born on the road. My parents were American, but over there, I moved here when I was a little kid. And then so I studied international relations in college, and microeconomics and world trade were sort of the area that I was most interested in. And international relations in 1989, when I started college, the most interesting place in the world was Eastern Europe, where the wall was coming down. And so most of my classes were around that. And a year before I did my year abroad, they opened up a study abroad program in Budapest, Hungary, and was excited to be among the first to do it. And so I went there in 92 and did the year abroad there. And then I actually liked it so much that I ended up moving back right after college. And totally, I've lived in Hungary for about 7 years of my life, but kind of over a few different stints. And the Harvard and New York University were just classes that I took along the way. So after I went to Hungary, after I graduated, I had a job that then sent me to New York City. And so while I was in New York City, I ended up spending some time at New York University, and then later went back to Budapest. Then I got sent to Boston, and that's when I was in Boston, did the Harvard course, and
That's amazing. I think, travel opens your mind and exposes you to think similar to like when you grow up with an entrepreneurial family, exposes you to things to pay attention to that you may otherwise miss. So I think that's fantastic.
Yeah. And I think, again, like kind of coming back to this ADD thing, I just think, I think I would just, implode in a large organization. And so when I graduated from college, just the idea of going out and getting a normal job and living a normal life scared the hell out of me. Now I'm doing it, but I guess even now I'm a founder CEO, and so I still have that kind of excitement. But just picking up and not having a job lined up or anything else, and moving to Hungary and just saying I'll figure it out, and like that to me seemed way more interesting than it wasn't because I just wanted to like be just a drifter or something. Like I actually did think that there was really good business opportunities in Hungary. You've got all these people who grew up in a communist system who suddenly have an open economy, and having 20, 30, 40 years of work experience is not necessarily a big advantage when that was an experience in a different type of, it wasn't like pure communism, but it was definitely not as open as the economy that we grew up in. And so when I studied abroad there, I was seeing that these heads of the region of multiple countries were in their mid-20s, and it was just a place where that it was almost easier for some of these international companies to take a blank slate and turn them into the type of person that they wanted to run businesses and companies than it was to take someone who had 20 or 30 years of the wrong type of experience. And so that was a big part of what brought me back there. Was I thought there would be some good opportunities.
Yeah, I mean, it sounds like it was an amazing opportunity. So fast forwarding from the 90s to the 2000s, you've been the head of growth at several companies, including Eventbrite, Dropbox, Lookout. What was it like helping those companies at such an important time of their growth? Because they're massive companies today.
Yeah, so I actually I'm not ready to fast forward quite yet out of the 90s.
Okay, all right, we can stay in the 90s.
Just the music was so good. I got to stay there for a minute now.
It's actually funny you say that. I've been listening to Throwback Thursday on Spotify like all week because it is just 90s gold.
There you go. But it was also a very lucrative time in the .com boom up until 2000. So it wasn't just about the music. There was a lot of money to be made. So I actually, when I first moved back to work in Hungary, I got a sales job where it was a pure commission-based job. Struggled in the beginning and then got pretty good at it. But then a friend of mine was starting a company, an internet company in 1995. So super early in the internet days. And it just intrigued me because I had been selling advertising, and this idea of just one-to-one targeted advertising was super exciting for me. So I took all of my commissions and owed commissions to me, borrowed against those, and invested kind of everything I had into this internet company in 1995. And so my first
what was it called?
It was called Uproar.com.
Okay.
So my kind of motivation was not just like, hey, look good on the job. It was sort of like I put everything on the line in this company, so I wanted to really help it be successful. So I joined them actually like 6 months after I invested. And originally, that's how I got to New York. So I was going to be selling advertising into these games, and got to New York and no one was interested in reaching the 42 people that were playing the games. There was not an audience that was big enough on there, even if we had really immersive advertising opportunities or, rich advertising opportunities. It was ultimately you need an audience. And so I told the CEO that I thought we were going to have a hard time building a successful business if we couldn't really grow a big audience on the games. And he didn't take it well initially, but then nobody wants to hear that. But I think there's a pattern across a lot of companies that I worked with. It's about really like finding that hard thing that's holding back success and like laser focusing and addressing it. And for us, I was not going to be able to sell advertising until we had an audience. So he gave me a temporary role to build audience on the games and kind of learned on the job. And so I, in the beginning, kind of struggled with it a bit, but eventually we built that to be the number 8 website in the world in terms of total usage time. And it was so if you took kind of average time used per user and average number of monthly users, we were number 8 in the world on ComScore.
Wow.
And it was a really hard path to get there. We were competing against Microsoft, Yahoo, Sony was the biggest advertiser on the internet. They had and then they also had their Jeopardy and Wheel of Fortune games that they were cross promoting their TV from their TV. And for us to become bigger than all of those guys on this kind of lightly funded startup out of Hungary. But I think so much of figuring that out was I had everything on the line in that company, every dollar invested in there.
Yeah. What was that moment like, right? I mean, you hear everyone that seems to be successful has this moment where they made this bet, right? And at the time it had to have been terrifying, scary, right? Like, what was that moment like? And why did you ultimately make the decision you did?
Yeah. I mean, I like kind of figuring things out over time. So, I mean, to me, the hardest decision was basically saying, we're going to fail if we don't address this. And telling a CEO that was the hardest decision. And I remember joking with my coworker at the time, sort of roommate, coworker. The New York operations was our 1-bedroom apartment. My wife was living there too. So it was kind of a crowded situation. And I remember kind of covering the phone and going, oh my God, I haven't heard someone use the F word so many times in one sentence. That was the response when I said, we're just being kind of too passive about customer growth on this. And there's this pattern kind of across my career where it's kind of like, we're missing, taking that very uncomfortable route, that terrifying route that ultimately is the thing that becomes super important for the businesses. So, actually how I ended up growing the business was a whole different path that kind of led to this growth hacking movement and other things that I write about now and talk about. But it was, it was definitely through trial and error that I got to that point. And then I ended up working with that CEO for another 10 years. He's the same CEO that we started LogMeIn with, and so
tell me a little bit about LogMeIn real quick.
Yeah, so I went back to Budapest after we did a public listing for Uproar. Went back to Budapest, was running international operations out of Hungary, and .com melted down. So I did some of the layoffs, but fortunately, we had raised a lot of money at that point, and so we survived pretty well through the meltdown. We had some good cash on the balance sheet. We sold that business in 2001. So I was still in Hungary, and then a couple of years later, we ended up starting LogMeIn in Budapest, and it's basically just a path of same sort of thing. I invested a lot of money into the company to start with. I mean, we were all kind of. A lot of the former Uproar people came together to start LogMeIn, and I moved as the first employee to Boston from there. And it was, it's just a kind of a scrappy, challenging part of building up that business. And my big kind of breakthrough, again, sort of scary moment was, I'm not going to be able to grow this business because I'm pretty good at driving signups. I got to the point where pretty early on in launching the business, I could get it to 1,000 new people a day signing up for the product. But as the head of marketing, my influence sort of stopped at the sign up page. And these people were not using the product. They were signing up, but there was kind of a complex onboarding process to go in and use LogMeIn. And so fortunately, I had the relationship at this point then with the CEO where we could sit down and look at the data together. And to his credit, he's like, oh my gosh, you're right. We're not going to be able to grow this business until we figure out how to get people who sign up actually using the product. And so he put the product roadmap, all product development on hold, and took all the product and development resources and said, until we get much better conversion to usage. So we were like 90+% of the people signing up weren't using the product. And over the next few months, we just did lots of experimenting, lots of usability testing and surveying and everything that, studying onboarding of other fast-growing companies. And all of these inputs ultimately led to experiments that helped us get about 1,000% increase in the sign-up to usage rate. And wow. Which basically hockey sticked. Right after we did that, suddenly our ability to spend money effectively went way up. And that was for me like this big aha that I can't grow a business on my own as a marketer. I have to have an integrated approach with the rest of the team. We have to understand customer value and work together to grow customer value if we really want to be able to grow a business.
Yeah, that's so key to growing businesses today. I love that you learned that so early. So do we go to the 2000s now? We're in the 2000s, right?
Yeah, we're in the 2000s. Yeah,
all
exactly.
Right. So you were head of growth at Eventbrite, Dropbox, Lookout, etc. LogMeIn is happening. Take me through this time, and it sounds like you've been at so many companies at this key point in their growth. How is that, and how have you impacted it as well?
Hard to know how much impact I had versus just being in the right place at the right time. Yeah, but so I ended up staying with LogMeIn until the IPO filing, and which was about 2000. End of 2007 was when we filed. I left at the end of 2007. 6 months later, joined Dropbox with this idea that, just like looking at both Uproar and LogMeIn and realizing that so much of our success in both companies was figuring out that customer formula up front, figuring out basically that whole, if you can't understand the value, build an engine around delivering the value and then scale that engine, you're screwed. Like, long term, we just then executed on what we had discovered in the first 6 to 12 months of taking those products to market. And so I thought that's by far the most valuable contribution that I made to those companies was what we did in that upfront part. So I want to work kind of exclusively in companies in that upfront part. And so it was hard to get people to buy into that idea that I'm just going to be that go-to-market guy. But I was able to convince like a handful of companies to sort of take a risk on it. And I first did a company called Xobni. Xobni did pretty well. It sold for about $60 million to Yahoo. And there's kind of some good and bad challenges with that. But the best thing was that because I was doing it in 6-month increments, like they knew I was leaving after 6 months, then it gave me time to look around without feeling like I was kind of going behind the back of the company. And so, actually the founder CEO of Xobni then introduced me to Drew Houston from Dropbox and said, hey, you should talk to Sean, and he can do for you guys what he did for us. And so I met Drew, and then I also basically what I learned when I was at Xobni was that, like, once you kind of lay out the pattern of what you want to do, the bottleneck isn't in deciding what to do and in executing what I could do as a marketer, kind of laying out this roadmap. It was really in the product development and onboarding experiments that basically take a lot longer to
get the
run.
Tech built.
Yeah, and especially in the early days of a company, not just to get the tech built, but to get enough user volume through there to figure out which is best. That it's kind of a relatively patient process. And so what I discovered is that I could double my learning speed, cut my costs back a little bit for these guys. And so I did 2 companies at the same time. So I went from Xobni doing one where I really diagrammed and tried to figure out what is this optimal go-to-market process. And once I had like documented it really well, then I could sort of follow that same roadmap in other companies. So I went to basically Eventbrite was the first that really sort of took this program that I'd put together and they decided in like less than an hour. We sat down, I walked them through it, and they're like, "Done, let's do this." And so
that's amazing.
Yeah, and then Dropbox a couple of weeks later signed on. But what was funny is that when I was walking, I mean, again, talk about like the out of comfort zone risk, scary thing. When I was on my way to Eventbrite to do this like 2-day kickoff with the CEO and the team was only like 15 people, but it was still like, what the hell am I going to do for 2 straight days with these guys? Like, I mean, it had been more of a classic interim VP marketing role with Zobni, but this one I'm really trying to implement this program that I've come up with. And as I'm walking there, I'm thinking, this is crazy. What the heck am I doing? I got to call these guys and tell them I got sick and we'll have to try to do this next week. And like, oh, screw it, just push through and you can do this. And, it turned out that like that kind of first meeting day. And then, I think I'd already signed Dropbox at that point. So like those two, and then, 6 months later was when I did Lookout, another company called Socialcast, which sold to VMware for quite a bit. I don't think they ever disclosed the amount, but it was a very good acquisition. So these next 4 companies all were really valuable companies. And, but it was sort of pushing through that super uncomfortable moment. And it turned out that, like by far the most lucrative a couple of years in my life was doing these companies like this.
Yeah. I mean, I think that's amazing because, we have about 153 portfolio companies here in New York, anywhere from ideation through, Series B and up. And, with the earlier stage ones, you see that, right? And you sometimes just need those fresh eyes to, tell you, what you're missing because you don't know what you don't know.
Right.
And yeah, that's so key. So you kind of built out this process, formalized it. It was working, you helped these companies. Is that what became Growth Hackers in 2010?
No. So what I discovered like after doing this for a while, it was really, really lucrative, but I got to the point where it like wasn't about the money so much anymore. It was kind of, at that point, it was kind of like
a game.
Well, it was in a sense, but it was sort of like I said, at the end of the day, I've always been growing other people's companies, So even though I was on the ground floor, and I actually told this I was having a beer with the the former CEO of LogMeIn a couple of days ago, and I actually kind of shared this with him that like that was a big motivation for me to start my own thing. Was that's like I have to see if I can do it. Like I know I'm pretty good at figuring out the value that someone else has built, but can I actually kind of conceptualize and create value and then grow that value? Can I pull that off? And so that was kind of the push for me. And what was funny, the LogMeIn CEO was like, "Oh, come on, you did just as much on the conceptualizing and creating of value at LogMeIn, and you can take just as much credit as And I was like, I almost don't want to hear that because it's still that drive. I work better with a bit of a chip on my shoulder, so I want the chip on my shoulder of saying that I still like that's an unfulfilled part of my life. But so first company I tried to start.
So let's actually do this. We're actually I want to hear all about that, but let's take a quick break. And when we get back, I want to hear all about how you started this. So we'll be right back. We're here with Sean Ellis. We're talking about Growth Hackers, and we're going to be talking about his new book right after this.
This is Ambition Today.
If you enjoy the show, then please leave us a review in the iTunes store. If you don't know how to do that, you can visit ciscar.co/review, and I'll show you in 3 quick steps. Ambition Today is happy to partner with Founder Institute. Founder Institute is the world's premier launch stage startup accelerator. We've graduated over 2,500 technology companies across 6 continents, and we've kind of started to figure out what makes a good entrepreneur and what makes, an entrepreneurial personality or DNA. We've put that together in a test, and we've had over 35,000 people take that test. So if you want to find out what kind of personality profile or entrepreneur you are, maybe you're more like Elon, maybe more like Bezos, you can go to fi.co/join/ambition to apply, take the test, and find out today. And also, we are happy to partner with WeWork. WeWork is a co-working space all around the world that lets you do what you love. They have offices in over 140 locations worldwide, and many of my own portfolio founders use WeWork for their early stage startups. They can work with everything from one-person spaces, in the commons area to full team offices. Dennis Mortensen, who we had from X.AI on a previous episode, he runs his entire 90-person plus company out of a WeWork. So if you want to learn more, you can visit syscar.co/WeWork to learn more and get started today. And now back to this episode of Ambition Today.
Visit Ambition Today online at syscar.co and follow the show on social media at Ambition Today.
Welcome back. We are here with Sean Ellis, and we've been talking about growth hacking and his career up until this point. So, Sean, you were just about to start your first company. Take us through what that was like to finally manifest something from scratch.
Yeah, so it's one quick note that I think something that really helped position me to be able to go out and raise some venture capital was one, when I had this process and was working with these companies. I had a ton of VCs who were reaching out to me and asking me to work with their portfolio companies, which was a good opportunity to build some relationships with them. But I was really optimizing my time and experience, not on money, which is kind of like sounds weird. Like it seems like with a lot of demand that you could try to really like raise the rates and everything else. And for me, the two big motivating factors were reputation and learning. Like I wanted to build reputation because that would open the door to the best learning opportunities. And then through that learning, like those were the two things that drove me. And what was good.
I love that, by the way.
Yeah. I mean, it really kind of set the right perspective on things because like twice I had founders sort of say, I just don't think our time together has been that valuable. And both times I sort of said, we're early with these, like it's like $10,000. Like, it's a bummer that they're not happy, but like, do I risk my reputation for $10,000? And I just kind of arbitrarily said, I think my reputation's worth $5 million. So am I going to trade a $5 million reputation for $10,000? I don't think so. So in both cases, I said, why don't I just give you back the money and we go our separate ways? If it's not a fit, it's not a fit. That's okay. And one of them actually took the money back and the other one didn't. But what was interesting is that the two companies that I did that to, the VCs who had made the original introductions were the first two to give me offers to invest in my business when I decided to start one.
Wow. Yeah, the optimizing for learning and reputation before money is something that I've seen again and again on this podcast with our guests, and it's so important. And I think not enough people value it. They're too busy trying to get a raise or get that $10,000 and stuff it in the bank account as fast as possible. And I love that you said that.
Well, and especially I think in the VC world, when you go out and you start trying to raise money, you're basically, there's a lot of trust that needs to be involved. Like it's chemistry and trust, and just like nobody wants to. You're committing to potentially the next several years of working together on a board of directors where if you don't like each other, then life starts to suck. And so being able to build relationships with a bunch of VCs through a period where you like showing some integrity along the way. They know that when times get rough, that it's somebody that they'd rather take a risk on that person than the unknown entity who just happens to have great credentials, but they don't really know anything else about this person or a great idea. And so you can kind of look to Uber maybe for some of those the challenges of what happens unfortunately when stuff goes bad. Yeah, and.
So you started the business. You're growing Growth Hackers. What was that like, and where is it today?
So actually, the business that they funded, I have the same money. I'm working off the same money from the same investors, but we've gone a lot of different directions along the way. So they funded a business that didn't work out, but we were able to get about halfway through the money and realize that a lot of the assumptions behind the business, again, like my big thing was, could I create value and scale that value? In this first business, like it was not in a point where we could really scale growth effectively. We did the TechCrunch Disrupt launch. We did some other things with the business. It was called Catch Free, but a couple of the key assumptions in the business I knew weren't going to work. So I still had enough money to where and I had my team, but I had an idea that wasn't really effective. So I went out and actually ended up acquiring another company or another product. So it wasn't quite my can I grow my own thing.
You got to play to your strengths.
Exactly. So I took something that had a little bit of traction and bought it from a company called Kissmetrics, and it was called Kiss Insights, a little side product that they had, which was actually in a lot of senses they built it. I had been an advisor to them, and they built it on my recommendation. So I kind of had a little bit of the credit up front. They built it in a way that's probably pretty different than how I would have, and probably in a cooler way than I would have. But so we acquired it, changed the name to Qualaroo, and really effectively for a few years ran that, built it up, and millions of dollars in recurring revenue from a really low base. And customers like Starbucks and Amazon and Uber, Customer Insights product that we ended up selling about a year ago, again as an asset sale that went into the business. And Growth Hackers actually started as kind of a side business for that product. So the Growth Hackers community started as a side business. So we sold that. So
congrats on selling that.
Thank you.
And so Growth Hackers has evolved, I think, besides just being a side project now. Yeah. You also just wrote a book called Hacking Growth with Morgan. Tell me about Growth Hackers and the new book and what you're kind of up to today.
Yeah, so I mean, the book really fits in well with Growth Hackers. I sold that Qualaroo business because I didn't see the headroom that I saw on Growth Hackers. Again, the theme of big risks. I sold all my revenue to basically focus on something that had zero revenue, but I saw like what I thought could be a really interesting business around it. And so we basically, the book and Growth Hackers is a community where growth professionals from around the world share insights and articles, and we bring in guests and just really kind of geek out around growth. But that platform has been a great opportunity to then launch other businesses on that platform. So the book, in a sense, kind of launched off of that, but it also enhances that. So the book then really kind of lays out the whole playbook for growth. But the core of our business long-term is a SaaS software product for having cross-functional teams work together to effectively manage growth against what we call a North Star metric. So it's really the quantifying value delivered in a product. That should be the single metric that really kind of aligns a full cross-functional team around creating value and growth in the business. And then once you're reporting that metric, having the rest of the team work effectively together through experimentation and learning and building out a knowledge base to actually learn how to effectively grow that business. So that's the software product that we've built. Mozilla actually standardized on it last month. We're starting to get some pretty good sales against it. Interestingly, I'm not really aggressively selling the product yet, but we had a pretty solid cash flow positive month last month on just all the ancillary revenue streams that are feeding product sales. So like our training, we just closed a sale yesterday, a $10,000 sale where they originally paid for themselves. The lead paid for itself because an information product that's a part of what we call Growth University. They took the course and then realized that to execute the process in the course, it would be great to have a product, discovered our product. They actually spent $10,000 without even talking to a salesperson. And so we're starting to see kind of the patterns of this like recurring kind of revenue SaaS business that I was excited about. But it's a patient product. It's a process because we have to get that SaaS product just right to really be able to scale it. And it's taken some time to get it to that point, but I think we're getting close.
Nice. And tell me about the book a little bit. What can readers expect from the book?
So the book really just lays out a lot of what I've talked about here. It's everything from how do you make sure that you have a must-have product that can actually support and scale growth? How do you identify what that North Star metric is that becomes that primary execution metric? And then we lay out kind of, and then looking at the growth teams that have been really effective for companies like Facebook and Airbnb and that become these cross-functional growth teams. How do you actually build one of those teams? And then how do you focus across each of the key levers of growth from acquisition and activation to driving ongoing customer engagement and retention and monetization as a growth lever. So how do you introduce new payment plans or the right payment plan and all of those pieces? They're all opportunities for growing a business. But I think up until this point, there's never really been a good book that lays out how all of those components work together and how to effectively kind of start from stage zero to work through and build a machine around growth in a business.
Yeah, and I think founders love that those tangential things that you can actually. It's not high level. You can actually reach out, touch it, and execute on it. And I think that's great. So, from a growth hacking perspective, right? Like what trends have you seen over the years? Where do you think like growth hacking as an industry is going next?
I think there's a lot of kind of misunderstanding around it at this point still. So I think as an industry, it's kind of legitimizing itself, whether you call it growth hacking or you just call it growth. That ultimately, I think that the realization is there in companies now that growth is not just marketing. Growth is the interconnection of kind of every part of that customer experience that sits generally in different groups in a business, and that somehow you need to think about how do you coordinate your efforts across that customer journey. And there's been a lot of good stuff out there about it. Yeah,
and I think too, so I used to work in advertising, right? And there's brand advertising, which is putting your brand on a billboard or just putting banner ads out, right? And then there's acquisition target marketing, where it's building out a funnel, tracking someone all the way through. And I can tell you, advertising is a dinosaur of an industry. Even when you think to TV and stuff, and so much money gets spent that isn't tracked. Millions and billions of dollars get thrown into TV spots that have you can't click a TV ad, to know how many people converted, right? But millions of dollars get spent there. And so, to your point, I think, it only makes sense that these organizations start to pay attention to the fact that they actually can own their funnel. They don't have to spend $1 billion as a bet and just hope they get customers out of it.
Right.
You can actually own it and have that information. So I think that's important.
And you're seeing companies I did a workshop or a kind of a keynote piece with country managers from around the world at L'Oreal in February, where they literally came to California for a 1-week intensive focus on growth hacking, and just to see how can they bring the growth hacking approach into this 100-year-old business, which is mostly being sold through channels, and is it something that's even relevant for them? But you're seeing it really across all these big companies. I think startups are a lot. I'm not the only one who thinks this. Everyone thinks startups are a lot more kind of nimble and agile in being able to kind of adopt new processes. So they've been a little faster to kind of break down the more traditional silos and have teams work together. A lot of startups still have a lot of work to do there, but I think the bigger companies are now realizing when you see something like Amazon, who it was only a year ago that they got a bigger market cap than Walmart. And then this year they doubled Walmart's market cap.
Crushing it right now.
Yeah. And it's not that Walmart has gone down in value. They're at a 52-week high themselves. So it's just that, this kind of very agile, test driven, and, Amazon takes it to a whole nother level where it's all machine driven tests, but it's this realization from these older organizations that the moats that used to protect them of just size and distribution networks and other things aren't enough anymore. That you've got companies that, from the time that Facebook introduced their growth team, they've added $400 billion in valuation to their business. So it's a pretty crazy way of scaling these very valuable businesses, and everyone should be paying attention. And I think they will, because it's too much money that's at stake to not pay attention.
Yeah, for sure. So talking about how founders love tangential things, most of our audience here is founders, entrepreneurial people. What is your favorite growth hack? Just one off the top of your head that you would throw out to the audience that they should be looking into or exploring or kind of learning more about?
So I think, one, it's really important to recognize that growth hacks aren't something that necessarily, transfer from one company to the next. The really great growth hacks in the world come from generally, you try 50 things that all fail, and then, or that are all kind of marginally valuable, and then you find one thing that's just breakout, like, oh my gosh, this is awesome. So it's the process that uncovers the growth hack. It's not like the growth hack itself that's particularly exciting. But my first one is still the one that I'm probably the most proud of, which was basically the same thing that YouTube grew off of a few years later, which was just basically embeddable content as a strategy was how we grew Uproar. We, instead of trying to buy ads against Sony and Microsoft and Yahoo, we made our games embeddable on third-party websites. So the gameplay experience would start on one website, drive engagement, drive sign up. So we moved our sign up till after they'd played the game. Now they were signing up for a cash prize that they had qualified for a drawing for, and then very good engagement flow that would lead them into a multiplayer game with thousands of players in that game. And we got these embeddable games out across 40,000 plus websites, including websites like CBS, Sportsline, and CNN. So like big websites, but all the way down to these like long tail websites. And at a time when everybody else was blowing money on TV advertising, and we did a little bit of that, but for us, the majority of it was coming through these games. And we had, for a publicly traded company, we had by far the lowest customer acquisition cost for a free registered user of any publicly traded company. So that's still probably one of my favorite growth hacks I've ever done.
Yeah, and I like what you said there. And I actually was listening to your conversation with Kevin Rose on a recent podcast, and providing value up front, right? Don't ask for the sign up right away. Seems obvious, right? But that I love that. That's great.
Yeah, value is ultimately what's critical with all of this, and it's all about a machine that increases your ability to deliver value at scale. Value is what drives retention. Without retention, there is no growth.
All right. Awesome. Well, before we end, I want to jump quickly to the Ambition Today question of the day. If you want to submit your question for future guests, you could do so on our website, ciscar.co. So Sean, what keeps you motivated, right? You've been doing this for years. What excites you? What keeps your ambition going, over the years?
Again, sort of the same thing that led me into the startup phase itself was like, into the founder area is like, can I do it? Can I create something myself that can become really big and interesting? I'm super proud of what I've done with other people's companies, but I still don't know if I have it within myself. And there's a lot of luck that needs to take place with that. And like, I won't beat myself up too badly if I can't, but, when you've got something to prove, when you've got a little bit of a chip on your shoulder, it's motivating, and it is for me. Like I know I could earn twice as much money as I do right now on half the effort if I just flipped into consulting, but that doesn't really interest me that much. I want to see if I can actually what I can do as a consultant. I can only kind of help one company at a time. With the book, maybe I spread that a little broader. But if I can get a really effective solution that I'm trying to do with my business now, then it's just how do I scale and help as many companies as possible. And but I'm constantly telling my team, like, if we can't have a solution that truly impacts growth for people, then who cares if we can build a successful company around selling something that's kind of just on perception. We need to be convinced that we really have something that impacts growth in a business, and then we'll feel great about being able to get that in as many companies' hands as possible. So that's kind of the thing that pushes me, is like just trying to go out and solve the problem at as much scale as I can that I'm trying to solve.
And embrace the chip. I like it.
Yeah.
So if you're still here, thank you for listening today. The show notes with links to everything we talked about will be up on the website. Screenshot this episode, share it with a friend, leave us a review. We appreciate the love. And if you love Ambition Today, then think about joining the show's back channel. It's full of exclusive access reserved for the best fans of the show, which is why we only mention it at the end of the episodes. And thank you for being one of the most loyal fans. If you joined today, you're going to hear the single best piece of advice that Sean has ever received. So before we jump to the back channel, Sean, thank you for coming on today's episode. Where can people find out more about you or anything else they should be checking out?
Well, definitely on growthhackers.com. We have like a Q&A section where you can post a question, and I'm usually pretty good at trying to jump in there and get them. And if I don't jump in and answer your question, then hit me up on Twitter. So that's just at Sean Ellis on Twitter, and that's probably the best way to get in touch.
All right, and of course check out the book.
Yeah, Hacking Growth.
I got the plug for you, Sean. Don't worry.
All right.
Make sure you check out the book. It's excellent. I got actually an early copy of it, I think. So it's amazing. Everyone check it out. Stay curious, everyone, and I will see you all on the next episode of Ambition Today.
Thanks for listening to Ambition Today. Be sure to visit Syscar.co to get all the information from this episode and more great content. Until next time, stay curious, everyone.